Stock of the day, CSL. Yesterday reported, I wanted to do a stock of the day today because I wanted to get Carl's view on the chart, because I remember last time or the time before you're on, Carl, you said CSL has a really interesting chart. Will it pop to the upper range? Well, their profit dropped 9% yesterday, the announcement for the first half. Vifor takeover costs really had an impact, but the CSL chief executive says the acquisition caused a drag on gross margins, but a number of its plasma collections were at record high. CSL Securus continuing to deliver strong sales. That's the vaccination part of it. Shares advanced as much as 7% on Tuesday before easing to trade 1% higher. Today it is, off slightly, $306. Carl, chart master, what are they telling you about CSL? Because Michael and I were talking just before we went on air, because Mark Moreland from Team Invest, massive fan of CSL, like a lot of the markets. When it was down at 250, 260, I was saying, gee, everyone's nervous about CSL. He said, look, it gets down to that level at least once a year. You just buy a few and a few more and then run it up. So it has been trading in that range, hasn't it?
Look, it has, yeah. That was post Vifor acquisition, and it didn't make it. I was sitting here completely clueless. I wrote a client note on it after that happened, and it was one of the few times I think I've ever said this in the history of my career is, look, just forget the chart doesn't look good, forget the chart, but it's just too cheap down here. So I put a buy on it on that day. I'm pretty sure I haven't changed that in any of the contract notes since then. So we're still at a buy at ThinkMarkets. I thought the result was, I'm going to call it a very, very small beat. Yes, its beauty is in the eye of the beholder. Some will say margins were down, but that's mainly a product mix change as plasma comes back on. Yeah. So the result was fine with me. Chart-wise, it is starting to look very, very good. I covered it yesterday in my Tuesday webinar for clients. I think... Look, we were hoping for a better close yesterday. You can see the two candle pattern at the end there. This is the short-term chart. So those upper shadows, so they're the sticky bits in the candles pointing up. You imagine the only way you can get those shadows is if you traded up there at some stage during the day, but you were beaten back down by the close. Yeah. So that does indicate that it missed some brokers' expectations and they're selling. The net 2 day is flat. So again, we're going to have to work through what the local fund managers think about it, and now we're seeing what the overseas fund managers think about it. Let's let the dust settle, and I think what will come out of this is the short-term trend, which is the light green zone, that's pointing up. The long-term trend, which is a dark green zone, that's pointing up. Overall, the price action looks good, and I think the candles are fairly benign at this stage, as in I don't think they're signalling anything too sinister to the downside. So the backdrop is one of strength. Looking to the long-term chart, this is what I pointed out yesterday to clients. This is what excites me about CSL, is this prospect of, if it can break through initially 320, I think 343 is the next target. But if we look back, and I've used a log chart here, Koshi. So what it does is we're seeing percentage gains. That's why the scale looks really weird. Yes. You can see sort of 80, 100. What I'm trying to show here is that you can't look at CSL in terms of what's a $300 stock and just focus on the price. I want to look at, in percentage terms, how well it's done into this consolidation phase, which you can see is lasting a couple of years now. From a technical perspective, if we can break through the top of that range, quite often you'll see what happened before the range happen after the range, and that could take us well beyond 343. So for me, I'm going to reiterate my buy on CSL today, both from a fundamental and technical perspective. Okay, so if it gets to 343 and breaks through that, then it's starting a new level. It's blue sky from there. So I'm happy to add some risk here. You might, if you're a bit more conservative, add a little bit here, wait till it closes above 320, add some more there, and when it closes above 343, that's your final entry point. Okay, all right. Michael?
We like CSL, and we've repeatedly sort of suggested that it's worth looking at, particularly when it's been back around that 270, 280, and a number of times over the last 3 years now it's looked like it's going to break out. Hasn't quite done that yet, but who knows, this might be the time. But looking back through history, there's been, over the last 30 years or whatever since it listed, there's been periods of strong consolidation and then periods of massive breakouts. So you could argue that the pattern this time is building up for a similar result. I thought the results yesterday were completely fine. I mean, it wasn't their best result in history. They are still cycling through some of the impacts of COVID, but it does look like they're on the recovery path quite nicely. They do look like they're integrating that Vifor acquisition quite well. The numbers coming through.
So that's going to be a win for them?
That's going to be a win. I mean, some of the costs around integrating that have been higher, but the actual numbers from that Vifor business have been probably better than a lot in the market expected. Their bearing business, or however you pronounce it, barring, that was a slight miss on expectations, and that's seen steady margin decreases over the last sort of few years. And that's probably one part that's a bit of a concern, but by and large, they've got a lot in the research and development pipeline. The valuation at the moment on CSL isn't that high relative to the 10-year average or the long-term average. It's come down well below the 5-year average, which is probably expected given the rise we've seen in interest rates, but it's not overly expensive by traditional measures. So we still like the business, happy to hold it. It's probably the biggest one or two positions in our portfolios and definitely in the model portfolio. So happy to stay the course here for the long run.
So you'd hold?
Definitely.
Would you buy at these levels?
Yeah, for new clients, if we had a fresh batch of cash and starting from scratch, we would include CSL.
Existing clients though, add to it?
Existing clients are pretty well up to the max, but we would buy if we had, if part of a new portfolio, we would buy probably 5-7%.
So what's the weighting?
5 to 7. Probably the model portfolio is around 6.5%, which is quite a large weighting, and that's probably the biggest weighting.
Yep. Okay.
Might even be a bit more actually. The big run up. Okay. That one's around, probably 7.5%.
So you can buy to 7%.
That's what we would do, but obviously each individual, depending on their
and it's only general advice.
And dividends and all that
as the disclaimer said at the start of the show.